Hey everyone, welcome back to the Market Chat. My name is Richard Moglen. Joining us today is a very special guest, Shahid Saleem, who of course finished 5th in last year's US Investing Championship with a return of 322%. And I'm really excited to have him on. He's basically prepared an extensive presentation talking through his entire style, how to think in probabilities, how to manage risk, keep a strong mindset, and also trade in different market environments, which is extremely, extremely relevant. So Shahid, thank you so much for being here and welcome to the show.
Hi, Richard. Thank you very much for this opportunity. It's nice to be on this discussion. Yeah.
Absolutely, and we've been talking back and forth on Twitter, so it's always cool to meet people in person. So obviously, you prepared a really awesome presentation, and I'm really looking forward to going through that with you. But to start things off, I think you talk a little bit about your background, and I know you're an engineer as well, just like me, so it's cool that we've got that same kind of connection. But to start things off, can you talk a little bit about your background, your experience, and how you got started with trading and investing?
Okay, thank you very much, Richard. First of all, I congratulate you for the time and effort you're putting in to help people. This is a great, thing what you're trying to do, and I know that a lot of people are getting a lot of benefits. So thanks a lot for doing that. Let me start with because of my accent, and I'd seen some other people, so I found that sometimes people do not understand. So I put everything up on the screen so that people, if they don't understand my accent, at least they can see what I'm saying. So I was born in Pakistan and did my bachelor's in petroleum engineering. I went to one of the best universities in Pakistan. After doing my petroleum engineering, I got a scholarship to go to US, and I did master's in petroleum engineering from University of Oklahoma, Norman, which is one of the top in the oil industry, and very famous for college football, Sooners. Yeah. I finished in 1990 and went back to Pakistan and started working with Schlumberger, one of the top service companies in oil industry, and worked for them for many years. And then later on, I joined ENI, which is again one of the top companies in the world. In 2001, we moved to UK in Aberdeen, and I joined Talisman, which is a very famous Canadian company. I worked there for a few years, and then I joined CNR, Canadian Natural Resources. And that was an amazing company, I must tell you. They grew phenomenally between 1989 and 2007. So in 1989, they were like producing like 1,500 barrels of oil equivalent a day. Wow. And by 2007, they were producing 0.7 million a day of barrels of oil equivalent. Such a high growth company. Yeah. Very, very innovative people. I became exploitation manager in Northern North Sea while working for them, and that was quite a big responsible job. Then I decided to stay technical, and then I became consultant for Centrica Energy in UK, and later I joined Cecil in London. Because of the COVID, I survived all the oil downturn, but again, when it came to COVID, my contract was not extended in May 2020. And from around July 2020, I became a full-time trader. I would have never done it if that happened, because in oil industry, the salaries are very high. Right. And being a consultant, you even get better pays, Right. So I started trading in 2007, and that was the worst time to start trading because we were heading for this market crash. Luckily, I was very lucky that I started with William O'Neill, the famous book, How to Make Millions. And I became so interested that then I took membership of IBD and MarketSmith, and even I took their courses. It was an eye-opener. And actually, I started pretty well in the market. There were some rallies early on in transport and oil, and I did very well, actually. Yeah. And also because of their help, I was able to get out of the market before the market crash. So when the market bottom in 2019, I was quite a bit positive even then, and I was, waiting for some of the best trades I can have. And William O'Neill said that the market had bottomed, and I bought some of the best, multi-baggers at that time.
Mm-hmm.
And let me show you this slide. So
Mm-hmm.
this was the last leg up, and then we can see a lot of distribution.
Right.
So, and they told us, and we were out of the market. And in this rally, I made some money.
Mm-hmm.
Just for people who think that, I want to, just when I'm telling everybody. So let me explain to you. This is if anybody who doesn't know market myth, this is the SPX,
right?
S&P. My green line is 20-day. My red line is 50-day. And my pink line is 100-day. And my black line is 200-day.
Mm-hmm.
Pink line, I basically use this 100-day I use for indexes. So sometime indexes come to 100-day, get supported, and then get off. So one thing I just wanted to point out that at times, over here, people thought that there was a double dip and then it bottomed, and look at this massive rally. I mean, massive 2 days. But look at what happened. So don't get impatient. Don't jump into the guns, like just looking into this. In bear markets, you get these sort of days. And you can see them again and again up here. And it doesn't, you have to be patient.
Mm-hmm.
Yeah. And at that time, the market sentiments right on the top up here.
Mm-hmm.
You can see
I can see your cursor, yes.
Yeah. So up here, the market sentiments were very high. And that is another red flag, other than the distribution days. So we were out of the market based on this and did very well. So let me go back. Yeah, give me a sec. Mm-hmm. So I was very well versed at that time about the power of relative strength. So if we look at here, I bought price line, called BKNG. This is, they're into this tourism sort of things. And if you look at the market, this is S&P, market was still going down. This share keep going up.
Right.
Yeah. And then it broke out here. I bought it. Similarly, and look at this, this is amazing. The point I'm trying to make here is that in the market, and after the bear market, there's a big chance of multi-baggers.
Right.
Normally do swing trading, but when the market is coming from a deeper correction or from a bear market, that is the time when I hold shares for a longer period, because you get a lot of multi-baggers at that time. Yeah. Otherwise, I am a swing trader who is holding from an hour to few weeks, not more than that. But excuse me. Just wanted to put in perspective. I bought it somewhere here, around 80ish. Look at that. It went to like 2000. I would not have held that long. I'm just trying to explain that you get multi-bagger at that time if you are keeping your eye open.
And we saw a lot of examples of that in the recent 2020 correction. A lot of stocks that held up really well and showed that relative strength and bottom before the market went on to go up 300, 500%. That's why there was so much opportunity last year, for sure.
I'll show you one of the, actually, I love bear markets and deep corrections because there is the opportunity.
Exactly.
Big scores. This is another one at that time. If you look at the Apple, it was basically nearly flat while the market was still going down. And I waited till it made the first base and I bought it. I bought it here. And then I did some here. And again, look at that.
Yeah.
What a multi-bagger it is. So this is the best opportunity.
Yeah.
Same was Amazon. Look at this. It nearly doubled while the market was collapsing. And I bought it here.
Perfect buy.
But then, here comes my biggest blunder of my life. I was watching CNBC after the market bottomed. although I was following O'Neill and he tells, do not watch CNBC. I was. And there was an analyst, I won't name him, and he was saying, oh, we are going for another major leg down. Now imagine I had these best of these stocks bought, and I was doing very well, even being a trader, who had just started.
Mm-hmm.
And I remembered this gentleman on CNBC that early on, like a few years ago, he predicted this market crash. And I thought he's a big guru.
Mm-hmm.
Yeah. And what happened was that I sold all my shares and joined his service.
Mm-hmm.
And he started telling us to short the market. So I sold all the things and I lost what I made and actually even more. Thankfully, I realized my mistake and I stopped that service. So my main message to the people is no one can predict the market direction. Be nimble. Listen to the market.
Mm-hmm.
And because like four gurus, like so-called gurus, or eight gurus trying to saying four of them are telling the market is going to crash, four of them are going to say it's going to go up. So market crashed. So those four who said it's going to go down were the gurus now. The next crash, out of those four, two of them will say, oh, market will go up, and two of them might say market will go down.
Right.
So whoever is right twice now. But it is basically just probability. Nobody can know.
Yeah.
So just lesson number one, gents, please.
Yeah.
Do not listen to anybody. If any, listen to the market, and we will discuss that in coming discussion.
Right.
Yeah. And this is my story. I was a full-time employee, and since 2014, I was shuttling between Aberdeen and Scotland, because in 2014, after that, the oil was not holding up very well. Mm-hmm. So the only consultancy work I was able to find was in London. But I had to travel every single weekend. Every single weekend, I will take flights. And instead of wasting my time, I was putting effort to develop myself. Nice. I joined Mark, and I will explain to you later on. And I put so much effort while traveling that instead of doing that, I was reading books, I was watching lectures and other things. I was taking notes. Mm-hmm. I was getting myself ready. The other problem being a full-time employee is that the market opens at 2:30 p.m. UK time. Yeah. And it closes at 9 p.m. So I was going home. If I leave around 5:36, I was reaching home like 7:30. So I didn't have much time to trade, and being in a job where you're quite a lot of stuff, a lot of meetings.
High pressure.
I hardly had much time in the day, to do something at all. Mm-hmm. Yeah. So I was about to give up and was planning to invest in funds. Then came a change. This is my real story. I give all my credit to two people for where I am. One is William O'Neill, and other is Mark. Mm-hmm. People might hate them, people might love them, but that is what it is. Yeah, I might have something about like Market Smith or maybe even Mark, but they are my gurus, they are my teachers. Mm-hmm. They taught me. William O'Neill taught me the basics, and Mark finished them off. I understood a lot of things from him, and I will explain you in a little bit. Mm-hmm. How I came across Mark Minervini was I was following his tweets, and he was talking about his books and MTP and blah, 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 blah. And I thought it's more of a marketing gimmick. Right. I didn't believe it. But I kept on reading his tweets. Then I can see that they make sense, and they were quite near to what William O'Neill was saying.
Right.
I bought his first book, then I bought his second book, and I was very impressed. And I said, okay, let me join MPA. And I joined MPA on 17th of June, 2017, about 5 years ago. And just for 1 month, his key man, Bob Wiseman, he called me and he said, are you sure? I mean, 1 month is nothing. I suggest that you join for a year because you can learn, and in 1 month, you might not be able to follow anything. So I said, fine. So I joined 1 year and had been a member since. And now I'll explain to you how I became a consistent investor. One thing people need to understand that we all go to uni, spend so much money to learn. But when it came to trading, where we are putting a lot of money in and taking so much risk, we don't want to spend money.
Right.
We don't want to buy books. We don't want to buy any courses, and we don't want to have a good guru or something. I was reading books for years and I was having courses, but because of that happened, what happened to me, once you lose money, then you get into bad habits.
Right.
Then you lose your confidence. And I was doing all these foolish things, even despite writing in front of me, having it in front of me, I will do stupid things. Yeah. And when I joined him, that changed the whole thing. I will read his book several times. On his MPA platform, there are lectures, old lectures. I will read the book, the chapter, and then I will listen to the lecture, then I reread it. Then I was taking notes and short notes. And then I started pasting examples of different bases and everything, And the key thing I learned from him was market theme and direction. And trading side by side helped me to overcome my fear. I was very jumpy. Trading with him calmed me down. I know that, okay, yeah, there's somebody, who knows way more than me. It's telling you not to jump off, just stay there. So it helped me to learn and to overcome my fears.
Right.
So how he influenced my trading? He had two big mottos: no big losses, no forced trades. And the third one is, I'm the biggest enemy in myself. There's blame of yourself. And he gives 2 lectures on the weekend. And one of them is totally on market direction and on psychology and other things. So if you look at on the slides, I'm not talking about buying. I'm not talking about anything else. If you look on Twitter, I can see that you are talking quite a bit these days on market direction and other things, which is great. But when you look at normal Twitter, what people are talking, oh, this share, that share, people forget that no.
The market trumps all.
They're way more important than a share. And we will discuss this in coming time. To me, psychology, he helped me in my psychology, emotions, sticking to rules, especially in volatile markets. Because fear and greed, which kills us. And how to stay positive. I learned risk management, which is low risk entries, stop losses, position sizing, progressive exposure. I'm not going to talk every single piece, but like do not buy, going down, do not add. I mean, you guys need to know that. That must be given. There's an expecting from people who are listening. So there are some basic things. So psychology, risk management, how to keep losses small. And when I will show you my 2000 and my UFC championship, you can see very little drawdowns.
Right.
Yeah, and I will explain people how to avoid big drawdown, because that is the key.
Yeah.
So the key to big drawdown is like stop losses, violations, It's very well written in Mark's book, How to Raise the Stop Loss is Selling Half if the share squat. So these are the things. So you might have 6%. In the past, I used to have like 6 or 7% stop loss, and that was my stop loss. But I learned to sell them earlier.
Right.
So that's why I was able to bring my average loss from 6% to 3%, because that makes a big difference. Market direction is the key. Interpreting the health of the market. When not to trade is the most important thing. Trade little or trade big. When to trade big. No gut feeling. Learning high probability setups like power play, VCP, consolidation, lower risk entries like low cheat, pullbacks, and he explains 2-step and 3-step entries. Again, the key is how to adapt to the market. When to hold a share long or for short term. Scaling in and out slowly. I used to jump in and out too fast. Before I realized I will go from 0 to 75% in a day and will sell the same. That I used to do. Even despite putting up all the rules, I was not able to follow them. Lower position size when things are not working. How to handle a stock after buying. That is the biggest challenge. And I put up some sections from his books and from his lectures, and also from William O'Neill. Selling some instance and free rolling, that had helped me so much on my psychology. Because once you're positive and you're increased your stop loss, so the only thing which you can become negative is the share crashes one day. Otherwise, and that helps so much. Even if you sell 30% of the share, that helps you so much to hold share for a longer period. Time compression in the base. Watch the shares, not indexes. We all use watch indexes, but the key is how your shares are doing. Maybe the indexes are going up, but the market is very weak. So basically, with William O'Neill and also with the help of Mark, I was able to be out of market a day before even Mark announced it in 2020 bear market. Luckily, since I started from 2007 now, I've never been caught in a deeper correction or a bear market. I always give a lot of respect to the market.
Right.
Yeah.
And do you mind if I ask a question? You might touch on it later, but could you explain what time compression within the base means?
Okay.
Yeah.
Let me see if I can.
If there's a later part, if we can get to it, that's fine. I just want to. I'm sure some people are wondering.
Yeah, like time compression is like sometimes the share goes down and it makes a V.
Gotcha.
You want a good rounded base.
Rounded base. Gotcha.
Good right side of the base.
Yeah.
Yeah, that gives time. Otherwise, yeah, anything can go up, and make a V and even go up. But the probability is lower.
Right.
When these bases take time, that is when the odds are in your favor.
Gotcha.
So this is my USIC investing championship. How I made 320%. If you look at starting here, you see any drawdown when we have the bear market? No, because I was listening to the market and I was out of the market. Actually, I was short, and I was actually silly. I broke my rule to come out of short too early. If you look at, it's not like I don't have drops.
Yeah.
I do have some drawdowns, but they were not big. This was the biggest drawdown. This was because a share just tagged on a day at the open. So I was a full-time employee up till here. And then I became a full-time trader here. And so this 322, at least 280 was starting in about mid-June or July. And you can see, and I mean, this is some ads, I added some money, so this is not real.
Mm-hmm.
So this is my actual, I not made it, this is from my brokers.
Yeah.
Yeah. So, and you can see, one thing I want to point out that you can see that you'll see a lot of places
Goes flat. Yeah.
nearly flat.
Mm-hmm.
You don't have to trade all the time. You can make 300%, even being selective. These market give us 2 or 3 strong rallies normally in a year. Just wait for it. Don't have to trade all the time. Yeah. So if you look at here, what happened was that I was annoyed of my broker for some reason, and I moved to another broker.
Mm-hmm.
And then that was a very complicated one. They had not a very good service. So it was a very difficult, they had a very difficult, platform.
Right.
And was not getting help. Matt Caruso
Mm-hmm.
was very kind to help me. But I was so angry with them that I decided to go back. So people need to be careful though, because once you start to leave, I sold everything earlier.
Mm-hmm.
Over there, I spent another week flipping around.
Mm-hmm.
And I said, I want to go back. And then I stopped trading.
Mm-hmm.
And I got an email saying, oh, you cannot go before 1 month. So people be careful. So that was stupid on my behalf to be out of market, basically out of market for a month. Oh. Yeah?
Yeah.
So if you look at, I hardly added anything here.
Mm-hmm.
Came back. This was my best month
Mm-hmm.
ever. About 100%, which I never have a feast even in a year before, even nowhere near that. So again, if you look at what it tells you, minimize your drawdowns. It's just compounding will help you, gents. Don't try to be greedy. Yeah.
And I wanted to ask you, what made you decide to enter the championship in the first place?
Actually, I entered also in 2019 when Life won the championship. He's a very competent guy.
Mm-hmm.
But I was again among the first 8 or 9.
Mm-hmm.
But I was like 8 or 9%, I remember.
Mm-hmm.
It
was choppy. Yeah.
The indexes went up, but it was a very difficult market for growth stocks. Also, I was full-time working.
Yeah.
Some people like Anish, they are phenomenal. I must say, hats off to him that he is also a full-time. He works full-time. He's running a I think health center or something.
Mm-hmm.
But he is able to do very good even then. So we need to learn actually from him. I was not that good. And again, my job had a lot of commitment.
Right.
Meetings after meetings after meetings. So the only time I had was from 7:30 to 9. Because of lunchtime, there was no trading.
Right.
So it was not easy. I mean, you can put in 1 or 2 shares to buy, but you don't have control.
Right.
So, and you can put a stop loss or something. So it was tough for me. But still, I was able to be among the first 8 or 9, even 2019. And actually, it was Mark who encouraged his people to enter in it. And then I said, okay, and I promised to Mark that, okay, I'm 8th or 9th, but I promised to him that I understand that how to be positive now. And from October onward in 2019, I did very well, till now actually. I hardly had any negative months, even negative months in this whole time for last like 2 years now. So I understood that once you have a feeling how to be positive, it's easier. So I entered and I said, okay, although I'm a full-time employee, but I'm sure I will do better this year. So I again entered that year. So a lot of people talk about holy grail of stocks. Gents, there's no holy grail. People talk about, if you look at novice traders, they're talking all the time about some magic formula, some scams. 90% of the time they're talking about that. There's no holy grail. It's a thing which needs to be learned, and it is a subset of many things. What I say is, do not try to be alchemists. Alchemists were some of the people who were trying to make golds from other substances for centuries.
Mm-hmm.
Very, very sharp people wasted their whole life trying to convert iron or lead or something into gold. Do not do that. There's no magic formula. The magic formula is psychology, market direction, risk management, and understanding probability.
Right.
These are the key things. You need to define your style. Day trader, swing trader, long. I mean, Anish and I both follow Anil and Mark, but still, I listened to his talk. We are different in many ways.
Mm-hmm.
His base trade, I think he goes for 25% position size. He wants to be heavy. I am not.
Mm-hmm.
My base trade is 15%. And I will explain to you later why I picked it up. Because when I was 25%, I was missing a lot of trades. The share I will miss will skyrocket.
Right.
That gives me, and also there's another reason. So a few days ago, a gentleman talked to me on Twitter and he said, oh, I changed my style, and unfortunately, whatever I made this whole year, I'm losing it now. And I changed my style. And guess what? The style I left is now making more money if I'd stayed. So guys, define your style.
Mm-hmm.
Do not jump in and out all the time. And I will explain you with an example.
Mm-hmm.
Stick to your rules. Understand yourself. Understand your weaknesses. Put it on a piece of paper. What is your weakness? Try to overcome it. Understand your risk tolerance. If you're like me, jumpy, reduce your position size. Sell into strengths. That's the way you can do it. That helps you a lot.
Mm-hmm.
My main thing is think about yourself like a tennis player. Those professional tennis players is grass court, clay court, hard court, artificial. And then there are different opponents. Some are left-handers, some are right-handers. Some are big servers, some are, some chop, flash it.
Mm-hmm.
Some serve and volley. So do you change your style? Do you change your serve? No, you don't. You adopt. You change the tempo of the game based on your opponent.
Mm-hmm.
If you see somebody serving very heavy and you try his serve, and you can put in good service, like him, very fast. Will you be able to win? You might have double faults. Your first serve might not go in. So do not just be like a tennis player. Adapt to the situation.
Right.
You need to know what's court. Are you in a grass court? Are you in a clay court? You're in a hard court? What sort of court you are? What sort of opponent you are? You have to play according to that. If the market is sideways or going down, play little or don't play.
Right.
If the market is coming from bottom, play more, hold for longer. So I will explain those things in the coming sessions.
Perfect.
And most of important is cash is a position.
Mm-hmm.
There are weeks and even months I never traded last year, and even this year. I mean, even this year, I'm about 92% now up. I'm not as good as last year, but I'm consistent now. Do I have doubt I will not do triple-digit gains? I had very little doubt that I won't be able to do it. It's just I'm now being consistent. Once you learn how to be consistent and overcome your mistakes, that is the key. And above all, post-analysis.
Mm-hmm.
Learn from your mistakes. I do post-analysis every single day, every single week, every single month. I do it. This is the key thing. And Now we'll come to the main question, how to maximize your profits. I mean, there are so many parameters, but I will just talk about 3 of them, yeah? So how you can increase average gain per trade. And I will come to that in a minute. Keeping a share longer doesn't mean that your average gain will be higher. Stock can go up and come down. You need to learn. You must have a strategy how to sell the shares. Sell according to the market conditions. Buy according to the market conditions. Average loss per trade. How to minimize your drawdowns and your batting average. So if you trade less, in bad times, you will see that your batting average will be phenomenal. I had a very good batting average in 2020, and I was able to have a higher average gain while having a lower average loss, and that made a big difference.
Yeah.
And above all, I keep reminding everybody, understanding or interpreting health of the market is the key, James. 3 of these 4 shares, they follow the market. And if you ask me, markets are going down. Actually, 1 out of 6 growth stock might go up, or even worse. Think about the odds when markets are choppy or when markets are going down. Think about whether the odds are in your favor to play or not. So once you understand, and I had a lot of examples about how to understand the health of the market. Let's go to probability. What is probability? So let's have a coin having a head and a tail, and it's evenly weighted, that there's a 50% chance of a head and a 50% chance of getting a tail. What is the probability? Probability of an event is number of ways it can occur over total number of outcomes. So over here, what are the total number of outcomes is? 2, head or tail. Number of ways it can occur, head, is 1. So what is the probability? It's a 50% chance of a head. But what are the odds? So think a little bit differently. Odds are 1 to 1. How you calculate odds? Total number of outcomes minus number of ways it can occur. So this comes here and the odd comes there. Sorry. Probability and odds. Let's look at a dice. It has 6 sides. What is the probability of getting a 3? It is 1 over 6, which is 16.6%. So the favorable outcome is 1, unfavorable outcomes are 6 minus 1 is equal to 5. So what is the odds of having a 3? Is 1 to 5. So will you bet if odds are 1 to 5? If the bet is 1 to 1? No. What is your break even? You need at least 1 to 5 to break even on this sort of odds. This is the key. We need to understand that if odds are not in your favor, so think about this as a bear market. So the odds are 1 to 5. So will you like to play? And I will explain a little bit the trade like a casino, not as a gambler, because casinos are not gambling, because odds are on their side. The people going there are gambling.
Right.
Because odds are against them. So coming back, 3 out of 4 shares follow the market. For growth stocks, it could be worse, 5 out of 6, or even worse. So why to avoid trading when odds are against you? Why you would like to trade when odds are against you? Wait. Don't try to bottom fish, because you will lose a lot. And especially what I learned over time is you try, and you lose so much. by the time when the market is bottoming, you don't have the confidence to go in.
Right.
Your psychology is beaten.
Mm-hmm.
And I will explain also later on that when markets are bad, I had a sort of paper, not a paper trading, but sort of a dummy trading, stocks. Because I trade 7 stocks, that is my base. But I mean, sometimes I held 10 or 11 when there are partials. But what I do is I try to have my last 7 shares. It was like if I'd bought them and I'd not bought because the market was bad. So I keep looking at them, that what is the risk reward over there? How many shares out of 7 are positive? How many shares in the last 2 when I bought? And when a new buy comes in, the first one which is dropped out.
Mm-hmm.
So even without being in market, I'm able to have a feeling.
Right.
And I'm very honest that whether I would have bought that stock or not.
Mm-hmm.
It was like I wanted to buy it, but the market was not good enough.
Right.
The risk reward was not good enough. The odds of the markets are against me. But because we are not, because we tend to forget about things. So that's why I started putting it in front of me every day that, okay, these are the 7 stocks I would have bought. Yeah, and I keep adding and dropping. So that gives me a very good health check of the market. And when this thing start to work, and then I start to go slowly. There are so many techniques which we can do without spending or without wasting money and without losing confidence.
Right.
And when you're able to do that, your psychology is so good that, I mean, it's like, I don't know, I play cricket.
Mm-hmm.
So in cricket, it's like baseball.
Mm-hmm.
When you're hitting, it's a lot to do with your psychology, your confidence.
Oh, yeah, for sure.
If you're not confident, you won't hit properly. Yeah. So once you lose confidence, you lose everything.
Yeah. I was going to say, and when you're not confident, you try to chase pitches that you wouldn't normally swing at because you're trying to overcompensate and try to make something happen, force it when it's not right. Yeah.
Thank you very much. I don't play golf, so thank you very much for that.
Yeah.
I am sure people listening can understand what I'm trying to say.
Exactly. Yeah.
Yeah. So do not lose money, gents. I had shown you a minute ago that how just compounding made me 322%. There are very rare stocks which were major winners, which I bought, mostly swing trades.
Mm-hmm.
If you look at, I started from about July time, and a lot of shares had already moved because I was full-time employed. I didn't have time to buy, other than few, and I'll show you some examples. Some more probabilities quickly.
Mm-hmm.
Probability of an event happening over a weekend, 2 out of 7. It's about 28.5%. So what are the odds? 2 and 7 minus 2 is 5. So if you have to bet $2 to $5, that is your break even. So if you can make $2 in a stock, if you can make $5 in a stock, and if you can lose $2, so that is the sort of thing you're looking at.
Gotcha.
Probability of drawing a red marble from a jar of 20. So there are 5 of them, 5 over 20, which is 1 over 4, which is 25%. So what is the odd? 1 to 3. And this is very crucial. Why not to take excessive risk? We just learned that there's a 50% chance of a head. But what is the chance of another head? That is 1 over 2 times 1 over 2,
right,
which is 1 over 4. So instead of 50%, now it's 25%. So what is the chance of having 3 heads in a row? That is 1 over 2 multiplied by 1 over 2 into 1 over 2, which is 1 over 8. So what is the probability of having 3 heads in a row? 12.5%. So we need to understand that although the chances of heads and tails are 50-50, but that is when you do like 100 times. So it will be around 50-50. It won't be accurate still. But in a row, you can get 3 heads and 3 tails.
Mm-hmm.
So now the odds are 1 to 7, so
Mm-hmm.
3 heads. But will I still, if I had to put my money in, will I'm going to still put in one trade all my money? No, because still there is a 12.5% chance that I can lose. We don't want to lose. So that's why we had this position size and stop loss.
Mm-hmm.
Even with such a high percent, like this is about how much? About 87.5% odd in your favor. Even then, I would not put all my money in one trade or 2 trades. Guys, don't do that, because there's always a chance. You might think that this share is going to explode. But what happened? That something went wrong in the market. Something bad news come in that industry. Something bad news come about that share, something to do with accounting, frauds or something else.
Mm-hmm.
But do not put all your eggs in one basket. And one other thing, I'm not biased, but I'm very careful when I buy Chinese shares.
Mm-hmm.
If my full position is 15%, if I had to buy a volatile share or a Chinese share, I will go maybe to 8% or something. I will never buy my full position. I'm scared of them, because one day they can tank, and I had my hand burnt on that. So very volatile share, I keep them
Lower, yeah.
lower. So I hope that I'm able to explain that even when the odds are in your favor, when the market is going up, be careful.
Right.
Still there a chance to lose.
Right.
So building in the failure, this is from Mark. So if the risk is 1 to 1, so you need a batting average of 50%. If the risk and reward is 1 to 2, you need a batting average of 33%. If the risk and reward is 1 to 3, it's 25%. So what we do, we normally target 1 to 3,
Mm-hmm.
because even if we are wrong, many times, 3 times, and right 1 time, still we are able to
break even.
In the bad market, what people try to do is do this, 33%. But unfortunately, the odds are against it. And I will explain you in a minute. Because as I said, if 3 out of 4 shares are going against you, 1 out of 3, you cannot make money here.
Mm-hmm.
If you do a lot of rolls, a lot of trades, there's a higher chance of losing money. I mean, gamblers can go in and win, yes, but overall the casinos win. So I mean, you're taking a big risk when odds are not in your favor.
Mm-hmm. And just curious, last year, do you remember kind of ballpark what your risk reward ratio and batting average were?
Yes, last year my average gain was 10.4%. My average loss was 3.2%.
That's really good. Yeah,
and
that's a great ratio.
My batting average was 52%. And I will ask guys to look at their batting average when the markets are good, and look at your batting average when market are choppy and going down, and you will find that your batting averages are very poor in choppy trades, choppy market, or going down, and you can achieve 47, 48% very easily if you know when not to trade. Even this year, I'm doing 9.4%. But my average loss this year was a little bit higher, 3.6, and my batting average is 43%.
Mm-hmm.
But a lot of my batting average is not good is because my position size was 5%, 6%, very low percent.
Mm-hmm.
And when I was making money, my position size was 15%.
Right.
So these things are very important. So As I said earlier, trade like a casino, not the gambler. This is a famous thing.
Yeah.
What is it? This is the whole key of trading.
Mm-hmm.
What is the difference between gambling and trading? Trust me, there's a fine line. We can go from trading to gambling very easily. The odds are in favor of casino. They had a built-in edge. They had a higher win rate. So if odds are 50-50, they'll go bankrupt soon because they had a lot of expenses. They can't cover it. So odds are in favor of them. I don't play blackjack, but I read this somewhere, and I will share this about card counting. A long time ago, there were some gamblers who understood that how to card count in blackjack. So after many hands, they will count trades, and then they will find that early on, actually, the odds were against them. So what they were doing, they were sitting on the table and playing very little. And when the odds were in their favor, they will start playing big. And when the odds were more in their favor, they'll play even bigger. Now what was happening? Now casinos were gambling, and those guys were not. And they were making money. And soon casinos realized, so they changed the rules and then put more decks in. And then there were other people who came in as teams and then started beating them. So there's a lot of history. Go and read it.
Yeah.
What it was all to do with odds putting in their favor.
Right.
And casinos were losing. So those guys were not gambling. They were the casinos then. The odds were in their favor. So gents and ladies and gents, be a casino, not a gambler. The day you understand that, you will make money. The day I understood that, I made money, and I'm consistent. So my suggestion is play little or not, and I will explain how to play in choppy markets in a bit. So what is high probability trading? This is key. Put as many odds as possible in your favor. This is my approach. Anybody can disagree, anybody can change it, anybody can add or subtract things out of it. But that is my approach. I put all the odds in my favor, try to put as much as odds in my favor. I would like that I trade along the long, medium, and short-term direction of the market. I'm timid. I'm not risk taker. I understand my limitation, and that is what it is. And as I said earlier, 3 out of 4 stocks follow the market. And in a market correction, it means the odds are 1 to 3. So you need to make at least 3 times just to break even. Yeah. But in odds and growth stocks, it is 1 to 5 or even worse. In some of the corrections, I found out that I had I used 2 screens. On one of my screens, I had a list of 25 shares. I don't watch them because I will explain you that I had some focus list and I just watch them. But why I put 20, 25 shares? Because that tells me the health of the market.
Right.
So if the Nasdaq is up, say 1.5%, and if more than half of my good quality shares are down, it means market is not good.
Right.
Yeah. So just remember that in growth stocks, when the markets are bad, you might need 1 to 5, 1 to 6 odds. You might need very big gains to break even for the probabilistic scheme. Stock coming from a proper base, and I will explain you this base has element of strength and base has element of support, shakeout. This is what I learned from IBD. Excellent stuff. And I will try to explain. I cannot put all the examples there because of the time, but a lot of the stuff is for the people to expand themselves, learn.
Right.
Yeah. Listen. Industry group performance. This is the key. A lot of shares. we see oil these days, coal. They move in groups, and finding groups which are doing well is easier using MarketSmith. And then within the industry group, I try to pick the top quality only. I don't want the laggard one. Also, high RS, excellent earnings, return on equity, new product, service, institutional sponsorship. These are all very important. And one thing I want to say that if I had to have choice between two shares and I can only buy one. So if I had a power play, I will go for it. We'll explain you later on. But the other, if they say similar base, then one of my key decisions is the industry group. Yeah. And my target risk reward is 1 to 3. In bad market, not only odds are against you, but risk reward is also lower. So it's not easy to make 1 to 3 in choppy markets. And that is the killer. And et cetera, whatever you want to think is your odds, whatever you think can help you. Yeah. Again, coming back to the same slide, what I said earlier, if 1 out of 4 stocks are going up, odds are 1 to 3. Then choppy markets. So there are two things now. Yeah, one is risk reward, and one is the odds of shares going up or down. So if you're here, 1 to 2, but if the market is or like 1 to 3 or 1 to 5, you cannot never make money. You need to have a market which is like 1 out of 3 stocks is going up at least. Yeah. So am I clear, or do I try to explain you more?
I think that's pretty clear. That makes sense.
Yeah. So why to minimize drawdown? This is just a theoretical thing, just to explain a little bit. So this is in months, and we had 14% first month, first is another. Sorry, my apologies. I'll start losing my mouse. 14%. Then we get into choppy market. You're going to you keep on trading -5, -5. I'm not talking about stop loss. I'm saying average loss.
Right, yeah, for the month. Yeah.
For -5, -5, 14. So if you do that, you end up 12%. So if I decrease it by, and so if I'm more careful, so I might lose a little bit on the upside. But look at what happens. 13, 4, 4, 4, 4, just dropping 1%. You go from 12 to 18%. Let's look at a third scenario. 11, 12, and you drop it to like 2.5%. Just trying to say that you make it half. Make it 26%. This might not sound big for you, but look at on 5 years' time. Look at the compounding. Yeah, you're making double just by decreasing 1%. And you're 4 times. And actually, sometimes things are even worse for people. I mean, to me, if you ask me, I might lose 3 or 4% here, but I might lose 1%, maybe 1%, not like that. If you get good, then actually this number will be way, way higher. How to minimize drawdowns? Trade directionally. High probability trades. As I said earlier, trade in the long-term, medium-term, and short-term direction of the market. I think I already talked quite a bit. Now, this is the key. Expose progressively. So you're coming from a choppy market and you have no position, or you are coming from a market correction. Do not plunge in the market with your opinions. Go in slowly, 10%, 20%. I mean, there'll be so many shares, will be popping up. It's not at the end of the day. Sorry. The goal is not to buy at the bottom. The goal is to buy at the lowest risk. Only fools can buy at bottom all the time and sell it at the top. Don't try that.
Fools and liars, yeah.
Yeah, fools are liars.
Yeah.
We can't. And I'll show you that so many times I just sell too early. That's fine. I'm happy with that. That is my trading style. I don't care what happened afterwards. So important thing is go slowly. So you're coming in. As I said to you, my normal position is 15%. So if two of my stocks are not working, so let me first go back a little bit. So sure. I'm in a trading environment and I'm full-time, invested, and two in a row are not working. Two breakouts are not working. My next position will be 8%. And it doesn't work, my next position will be 5%. If that doesn't work, I'm out of the market. And I go back to my dummy buys.
Right.
But I'm keeping dummy buys all the time, actually. It gives me a bigger number of shares to think about. That, okay, instead of 7, if I had bought 14, how they would have been doing.
Right.
Going slowly, one at a time, or maximum 2 with 5 or 6% positions. And use them, and if they work, then use them to fund your next share. Then you can go to from 5 to 6%, you can go to 8 or 10%. And if that works, then go move to 15%. So similarly, expand your exposure slowly. Take your time. There's no rush. Because the time you think that market had bottomed or we are going up now, trust me, market is counterintuitive. I did it so many times. I had my hand burned. I went from 0 to 75% in a time of 1 hour.
Right.
And next day I was selling all of them in loss and jumping out.
Yeah.
So this is what I learned, and that made a big difference to me. Protect break even as quickly as possible. Do not choke your trade. Some people say, oh, I'll make 4% stop loss. Yeah, it might depend upon the market conditions, but if you choke your trade, then there's a less possibility of, then your batting average will go down.
Right.
There are other ways to bring your stop loss lower, which I said, like violations, and other things. So stock goes up, and after the first pullback, it goes up again. Take it to the break even. If you're ranked 7 or 8 or 10%. Now don't let that come down. I'll show you later on that how I did with a couple of examples, and how I was selling and how I was raising my stop in 1 or 2 examples. Sell into strength, especially when the markets are choppy or not very strong. That makes a big difference. Now you cannot lose money unless it tanks, and free roll the rest. So sometimes I had sold 75% or 66% and free roll the last, and that something brings a lot of money. Do not try to sell at the top. Just take reasonable profits. In the normal market, I sell some at 20 to 30% profit, because most of this time, stock moves 20 to 30% and then form a new base.
Right.
I don't want to waste my time for another 7-8 weeks in the base. I will sell them and move to the next stock if I'm finding another stock. I only hold for a longer period if coming from a bear market or deep correction. This is key, to understand how to play the market. where the market is coming from.
Could I ask a question actually on the last slide? If you could go back quickly, could you talk about the psychology behind selling into strength? Because I think it's something that a lot of people struggle with because the stock's making profit for them. It's doing well, but it gets kind of volatile up there when it gets extended from a proper buy point. So can you talk about how kind of this helps you and helps your psychology as well, not just keep you profitable and keep the average gain consistent?
As I said to you, that it depends from person to person.
Right.
So you need to know yourself. I know I'm jumpy. I hate to lose money.
Right.
And Mark told the same. He said he also lost. He also don't like it. And he also learned this thing. So there was his lecture, that changed my strategy like this. Once I sell some shares in strength, now I know I'm not going to lose very easily, because once I sell in the strength, so my other stop loss is at least at break even, or something even higher. So I know I'm not going to lose money unless it tanks.
Mm-hmm.
And that gave me a big relief.
Right.
To hold the rest of the shares for a longer period. Say if the market is strong, I might sell 33% in strength. Yeah. And keep the rest. Mm-hmm. Now I know that I'm not going to lose. So it's a big psychological boost for me. It might not be for others, but it is because I'm contented with what I've got. I don't care whether it doubled or tripled or, Monday morning quarterback is very easy.
Yeah.
But I will explain to you that I just do not sell instance like that. A lot of time it's because, it changes its direction, or it had a bigger up day on a higher volume. Mm-hmm. Or the market is difficult, I want to sell it. Mm-hmm. And I know that very soon it might just turn around and go back. And I can show you some example that actually selling in strength is not bad. Mm-hmm. Mm-hmm. Yeah, sometimes. But if you're intended that, this year is going to go up, keep 33%, keep 50%. Mm-hmm. But those people who are jumpy, get some profits. It's not for everybody, especially somebody like me who hate to lose money. I'm covered.
Right.
I hope this answered my question.
Yeah, it did.
Your question?
Yeah.
It's personal. Sell early, violations keep piling. So you had a stop loss, say 6 or 7%. And that made a big difference to me. Mm-hmm. A lot of time, because I am able to keep my losses, drawdowns lower, because when the violations pile up, and I'll explain those violations in Mark's book, and that brought my drawdowns lower. Mm-hmm. My stop, my average loss to lower. And now what I do is, if a share went up like 4% today and loses 3%, mm-hmm. I normally sell at least half of it at break even, and mostly sell the other half if it goes below the day's low. Mm-hmm. Because the odds of getting up is lower. Mm-hmm. If it doesn't come to break even, Scott's, I might still keep like 50%, mm-hmm. or 66%. But if a share which has gone up like 4 or 5% and it loses 4%, the odds are lower. So as I said to you, I'm playing with odds. Right. If there's a trade with odds against me, I'm not playing it.
Yeah. My best trades have always just worked right out of the gate. I'm in a profit and it just starts trending. Yeah.
Exactly. Very well said. Exactly. And whatever, those are the best trades that go up straight. I don't like these Scots. But It's not like that. I always sell every Scot. A lot of time I had half share. A lot of time I sell all, and then if they improve, mm-hmm. then I might buy them back. Mm-hmm. You can always buy them back. But that helps me to reduce my drawdowns, to reduce my losses.
Right.
This is the key. Trade largest when you're trading your best. I hardly use what you call. I don't use brokers' money. Yeah.
Margin. Yeah.
Margin. I don't use margins. I even forgot that. I hardly use them. I only use them mostly for the day. So if I have 2 shares to buy and I don't have money, I might buy 2 shares and then start thinking what to sell before the end of the day. And actually, that is very good for me.
Mm-hmm.
In a while, because then I start thinking out of those shares, which one I can sell or which one I can reduce. So I hardly use margins.
Last year in 2020, throughout the contest, were you not using any margin at all?
I was not. As I said to you, I'm covered, I'm timid, I'm jumpy.
Yeah.
But I'm now thinking to do a little bit, one by one only, one at a time, not much. Like first add 15% margin when the market is good, and then learn from it, and then add on.
Right.
But I'm very jumpy, so I don't like it.
Yeah.
I'm more comfortable within my own game.
Makes sense.
Yeah. Trade the largest when you're trading your best, and smallest when you're trading worst or not at all. Again, I say, cash is a position, guys. Just stay out, relax. I mean, these days I'm in Edinburgh. I'm not in Aberdeen right now. I'm just enjoying. I'm not going to buy in this market. I will let it prove it to myself, and then I will buy it. I honestly, I don't even know what happened today.
The close was not great. For everybody watching, for reference, we're recording this on Monday, so the market's definitely we're in a correction, maybe an attempted rally, but it's still very, very shaky. So
But what we all need to know that if a market opens strong and closes weak, be very careful.
Yeah.
Not a good market.
Yeah.
But I had my confidence in myself, and I'm not buying it, even if it jumps 3% tomorrow.
Yeah.
I'm not buying 3% unless it proves me. As I said, I'm not into, trying to fish bottom. I will only enter when I feel the risk is lower.
Right.
Not before that. This is the whole thing. Listen to the markets. This is very, very important. And please try to ask if something is not clear so that it's understandable for the people.
Yeah.
Because these are ingrained in my head, so I might not find them as somebody would like to, and there are no people to ask questions. So it's hard for me. This is like breathing for me. So it's hard for me to understand how to tell and what to tell.
Yeah, looking at this, first of all, Ray, who I work with at Trailline, he loves your first bullet, performance of the portfolio. He analyzes his equity curve. What was he doing when we have a spike? What's happening when he's got a little bit of a dip? So yeah, he completely agrees with you on that. Thinking about what people might have questions, is this sorted just in general from most important to least important to you? It seems a little bit like that.
Few of them for me.
Yeah.
Up till here, are all nearly at the same level.
Gotcha.
And I'd have some examples. I mean, indexes are important, but not that important. if Nasdaq is, and I will show you had shown it many times. Many other people had shown many times the divergence.
Right.
Yeah. So the divergence in markets are very important. But it is very important to understand when divergences are more dangerous than others. After a long rally, if the indexes start to go, to diverge, that is dangerous. So failed breakouts, shrinking setups, smaller watch lists, distribution days, professional selling, divergence in indexes is very important. Yeah. This is the key. Nasdaq stocks above 50-day and 200-day. This is I learned from Mark. I never knew it before. I know a lot of other things beforehand, but this is what I learned, and this is very, very powerful. I'll show you some examples. I mean, definitely distribution days are very important. Professional selling. Sentiments. When I'm saying that distribution days, also think about when we are bottoming, then we need to listen to the follow-through day and, what to call ratios and other stuff. Sentiments, and I'll come to that, that is contrarian. Seasonality. We know that from September to October is not a good time for the markets. So we need to, it doesn't happen all the time, but we need to remember that. This is the key. Also, what industry groups are performing? Are they leaders? Are they laggards? Are the indexes going up because of the laggards? Or leaders or defensive groups? Or is it sector rotation? So I had a couple of slides at the end to show on these things too. These are like performance on the week by week comparison, 3 months comparison, 6 month comparison. But then there's a daily industry group also in MarketSmith. And I also look at that. At what sort of, so if market had gone up, say 2% up or 3% up, who are the performers? Were they defensive shares? Or the laggards? Or were they leaders? That is a very good check also to understand these things about the direction of market. Number of shares.
Yeah, I was just going to ask, how do you define a leadership group? Is it the type of group it is, or is it just what's showing relative strength and what's been trending well in the markets?
Yes, it is we all know that MarketSmith had 197 industry groups, and they sort them out basically every day.
Yeah.
So they compare. So they're ranked 1, 2, 3, 4, 5, or A, B, C, D, E. So A is the best and E is the worst. So if I see E, the top performer for the day, so a lot of E's and D's, so I can see that, oh, they're laggard groups, or they could be defensive groups like Souths,
right?
Yeah, and stuff like that. So this is very interesting, and this is important to know what sort of groups are performing at the moment.
Right.
Are they the first 40 groups among the first 40, or are they coming from? Are they like E category, or they're like 190th?
Yeah.
And they're just, they say that when turkeys start to fly, be careful.
Yeah.
So that is what we're looking at. So it is possible that the leaders are not performing, but it's the laggards, which are not performing.
Right.
And you have to be careful on that because they're holding the indexes now. Just before I forget, one thing I also found out that, and maybe I'll wait till next week.
Okay.
Number of shares up and down, inflation is very key because that can trigger recession. This stock participation is advanced decline. So these are few, these are not all. There's so many others. So market conditions are key to me. This is 2020. And I will show you piece by piece that why I was out of the market before. So what was happening if we look at here? Richard, I saw your presentation on distribution days. If somebody wants to go and watch Richard's, that is very detailed on that. So we can see a lot of distribution going on up here, but just keep on going. And then all of a sudden you see this jump.
Right.
To me, after a long thing, I mean, first of all, if market is going up like that, and then it starts to go up like that, I'm very careful when it changes its slope. It can go quite a bit, but you start to be careful.
Right.
And it changes its slope like that. And especially when you get these sort of jumps, these could be exhaustion gaps. So you need to look at into detail at this time what is happening. Keep looking all the time what is happening. So I can see that we had a lot of distribution days. Next thing was divergences.
Mm-hmm.
So since January, which is here, market, Nasdaq was going up.
Mm-hmm.
You can see that I don't care about Dow Jones too much, but NYSE and S&P
Mm-hmm.
were not making new highs actually. Yeah. So a little bit of caution,
Mm-hmm.
at least an amber light. Then I look at Nasdaq versus IWO and IWM.
Mm-hmm.
IW is the growth portion of
The small
Russell
caps. Yeah.
2000.
Yeah.
So we can see that IWO was not bad, but it never made a new high like Nasdaq.
Mm-hmm.
If you look at here, the gap was increasing, but Russell 2000 was making a lower high here.
Right.
Another number. Then I started looking at what is happening in the market. So the market favorites, could be Facebook and many others like, I'm just showing you a few here. So I had another watch list where I put these big names, big caps, which can hold up the market. That the index is going up, but IWM is going down. So we can see what happened during this time. I mean, the market tanked here, if you remember.
Mm-hmm.
This is Nasdaq here. This is Nasdaq here. Look at NVDA. Boo. Look at Microsoft. Look at Amazon.
Mm-hmm.
So these big caps were holding market.
Right.
While small caps were going down. So another number for me. Just to mention that when these sort of divergences happen, if I want to trade, then what I do is I trade these sort of shares, large cap. Because if somebody wants to keep the market up, these are the sort of ones to buy. So I start watching those big caps much closer. So they'll be my preference trade if I want to, not the small caps then. This is 2020.
Mm-hmm.
And this is 200 day. So if you look at here, Nasdaq is going up, but stocks above 200 day were slightly going down actually.
Mm-hmm.
Not a big thing. I was not worried to look at that. I mean, it came from like around 60 something to say 50, say 60.
Mm-hmm.
I mean, normally you like to see the other way, but it was not. So it doesn't matter. And I will explain you, because this was such a strong market that a lot of stocks were above 200 day.
Right.
So this stocks above 200 day was not a very good signal actually.
Mm-hmm.
Just look at what happened when we plot this one. Number of stocks above 50 day. So there was a big divergence already started here.
Right.
And that was a sort of red flag for me.
Mm-hmm.
So you have distribution days, you have divergences, small caps not performing, and then participation so poor. I mean, over here, it was going down. So that was a little bit of red flag for me.
Mm-hmm.
So, and that's why I sold, and I was actually short of market. But unfortunately, I just abandoned my short positions. It was a big short position. And I broke my rule, I must admit. My numbers would have been way, way higher if I had stayed to the rules. Maybe I can explain to you what happened. I shorted here when I saw this jump. And what happened was these stocks went down and came all the way up here.
Yeah.
And actually, yeah. And although my stop loss was up here, but I just aborted it. I got chickened out. I was stupid. Let me put it like that. If it kept it, I would have made a fortune. my numbers would have been way better than what I did. But anyway, it's easy to tell one, but I'm admitting my stupid mistake. Even after so much success, we still keep on doing stupid mistakes. But this was very worrisome for me.
Right.
That stock participation is going down. Okay. Let me see. So this was the market sentiments. So market sentiments were touching 60, which is a little bit dangerous again. If it is not red, it is amber. It goes way above 60, then it's very dangerous. But it's touching 60 was bad. While I'm talking about this, let me tell you, when bulls and bears crossover like that, so that is also a time when market might be bottoming.
Right.
Because these are contrarian. Now we'll come to 2021 market. So if you look at here, this was NASDAQ. So NASDAQ actually started to outperform since here, yeah, since May. And we can see IWM is going down, and IW had been since February.
Yeah.
It was underperforming. And that is our growth stock. So that makes you worry what is happening. So I mean, it's not a red flag, but it's a yellow flag, amber flag at least. This is very important. After February, look at market went down. Stock participation was 82.5, around 80%. It came down to 65, which is fine, because market was pulling. When market went back up, we didn't got what happened? It went the other way, isn't it? So this is another red flag. and even now, this is I made many weeks ago. I'm not changing it, just wanted to show that even weeks before today, why I'm out of the market? Because of this. Because Nasdaq keep climbing up, and look at the stock participation. Only how many? 38%, 39% stocks. Up here it was 35% stocks. So this was a red flag for me. So since here, I was very careful about the market. And that's keeping my batting average high because I'm careful in this average. I'm very careful. I made most of my money till February. And after that, I'm trading small. Here and there, nibbling here and there, and making some money here, some money there. But I mean, once you see this, you would be very, very careful. Guys, odds are against us. The stock participation is very thin. Yeah. And this is, you can see, this was like 3 weeks earlier at least. Like not even mid, even earlier than that. Once we started chatting, Richard, and I just kept it just to show to people that when I was making this, this was my worry even then, weeks ago. Look at 50. It went from 85 to 44. Just here, It went up a bit here, which was good. But then again, market keep climbing up, and look at that.
Right.
It's tanked here. Only 25% stock above. Is this a high order market? No. These are red flags for me. Another one, advanced decline line. This is from IBD. So when the Nasdaq made a similar high, less advanced decline line went down. But when you look at here, what is happening? Nasdaq going up, but look at the advanced decline line. Again, telling me less stock participation.
Right.
So every single thing is pointing me to be very careful. Trade or no trade. Trade lightly or no trade. Why to trade? Why to gamble? Why to become a gambler? These are treasury yield. I won't go into that. This is seasonality, and Mark shared this on the Twitter, so I just took it from his.
Mm-hmm.
So we see that they keep climbing. This is based on years of calculations where we are on the cycle, and we can see that after August you go down, and September to October is a bad time.
Mm-hmm.
So anyway, we are in a bad time at the moment. So I had seen many times that the market doesn't care about season, but it's just to keep in perspective.
Right.
Market sentiments. If I look at market sentiments, they're not that bad actually. I mean, they're lower. This was from September 2021. So that's okay. They're not bad. But there are other things pointing to be very, very careful.
Mm-hmm.
Now I'll go back to 2020 bear market, and we'll discuss what I bought.
Perfect.
So this is, remember, S&P,
Mm-hmm.
back. So what is interesting, my apologies, this is not that clear, and that will be more clear. So you can see that S&P was here, and then this was the bottom.
Mm-hmm.
But this keep going down while it had bottomed.
Mm-hmm.
Look at the way, even before the market bottom, it moved up.
Right.
And look at the RS line here. It just skyrocketed. So one had to be blind not to see it. The only thing which keeps us not buying it is that we are scared. We tried so many times that when the time comes, we are scared.
Yeah.
And I bought it. I was waiting for this time. I love this bear market because this is the time to make money. And this is a few of the stocks which I kept for a longer period. So I'll explain to you again here. So this was the time when the stock bottomed.
Mm-hmm.
And look at market going down and stock going up.
Mm-hmm.
What else we want to see? At times I used to get scared, but because what happened was that then they will pull back sometime and go sideways. While there are other stocks running up like crazy. And I was thinking that, oh, this is not going up anymore. It's not the case because it had already gone from 65 to about like how much?
94.
90-ish.
Yeah.
94-ish. So it had already moved so much. So people are now interested in jumping in bottom fishing.
Right.
Wait, I did this mistake many times that I thought, oh, it is out of favor now. No, it's not out of favor. Look at what happened. I bought it here. I waited for it and I bought it here.
I think I bought it the same day actually as you.
Really?
I didn't handle it as well as you. I got shaken out right here on these 2 days.
Oh, okay.
Yeah.
I understand. I thought about to sell it, but I didn't.
Yeah.
As I said to you, when it's a bear market, I'm ready to keep it for a longer period.
Right. Do you use Mark's 50-day rule where coming out of a correction when it moves past his yeah, okay.
Yes, I do. I use two of them.
Yeah.
Should read here, use 21 day and 50 day. Actually, I was using 21 day and 50 day, but I didn't hold it on 21 day and 50 day.
Mm-hmm.
I always had multiple selling theories. If it start to go up, then I will sell in strength if they start to get extended, or if they break 20 day or 50 day. So over here, I said I'm going to use 50 day. So just for people who do not understand, or let me explain you that if I use 20-day. So if this was my buy and this was my stop loss, so once my 20-day crosses stop loss, then I will put it on 20-day control.
Mm-hmm.
So I let it go, let it go, let it go. And I knew that there will be some pullbacks. I'll be shaken out. So I didn't sold. Normally I would have sold 30%, 33% here, but not this time because I'd seen so many times. So actually I was even thinking here that it will be 50-day for me.
Gotcha.
Yeah.
And
but
do you mind if I ask a question?
Yeah, please.
So when you switch your stop loss over to those moving averages, are you considering that on a closing basis and only selling near the close, or is that an intraday stop for you? Does that make sense?
There are many variations.
Yeah.
Okay. Sometimes, let me explain you. Sometimes you let them come down,
Mm-hmm.
and then that is your stop loss. If it doesn't go up in 1 or 2 days, then you sell it.
Gotcha.
That is one way. Sometimes if it is, in this sort of situation, I'm ready to give more time.
Gotcha.
Yeah. But in a market which is choppy or not very strong, I'll just sell it, time it, cross this 20-day.
Gotcha.
I'm not going to take a chance.
Gotcha.
It depends from market to market. In this sort of situation, I will take every single chance to play it long. I thought about it selling here. And then I said, no, my rule is up here was 50-day, and then, or my stop loss.
Mm-hmm.
And I thought I will ride it.
Mm-hmm.
And I did that. The only thing if you look at why I sold it, a big candle and a big volume.
Right.
And then I said, okay, do I sell all or do I sell half? And I sold half. And I kept it, let it go down. And you know why I sold it? Look at the volume here.
Mm-hmm.
The shrinking volume.
Mm-hmm.
I didn't like it. It was going up on shrinking volume, like even these long candles was at smaller volume.
Right.
So I sold it here. And if you look at, if I kept with my 50-day, it would have gone up, but that was my rule, that I'm going to sell into strength like that, or it would be 50-day. So I'd always do sell rules, which might be difficult for some people, but that is the way I play. I like to sell into strength. If you ask me in a normal market, I could have even sold here.
Mm-hmm.
Then it changes its gradient.
Gotcha.
When the stock changes their gradients, they become dangerous. So I sold here and I sold here, and I missed all that, and I don't care. But normally I do not keep shares that long.
And before the kind of intermediate pullback in 2020, right here, if you see that marker, the overall market kind of changed its slope a little bit. Is that something you keep an eye on as well?
Yeah, I kept, but you know, yeah, that is always, that is another point where I like to sell.
Mm-hmm.
That I thought about it, and I said, okay, do I sell, do it, or don't sell?
Mm-hmm.
But if you look at here, that, even it going up, it came down. And then I said, no, I will stick to the rule because I was expecting some volatility. That's what I was saying to you, that I was ready to let it go to 50 days.
Mm-hmm. Mm-hmm.
I was ready to let it go to 50 days. The other way I could handle it could be is to sell when it breaks 20-day, half, and then leave the other half for 50 days. So there are very different variations.
Once you have profits, you can get creative with
yes,
those type of things. Yeah.
Let me explain to you that I make my sell rules when I buy, but then I change them based on the market.
Mm-hmm.
I change them on a weekly basis when I'm out of market. Yeah. Because, like, as you very well pointed out, that the market was going up there. My question to me was, am I ready to, I was expecting this.
Mm-hmm.
In another time, it was my old times, I would have sold here.
Mm-hmm.
But once I had a day planned or a month or a week planned, I'm not going to break it.
Mm-hmm.
Mark that the share just did that, I'm not going to sell it. That is where emotions come in. That is where psychology comes in. In this sort of market, if we remember that this market was a V-shaped rally, and there was all the expectations of volatility there. And I knew that my risk reward could be good.
Right. Right.
But the other way could have been is sell half, breaking 50 and sell half 50. You can play any variation. The only thing I changed my stop losses, not stop losses, the way I will sell it,
Mm-hmm.
but not on the floor. That is when you do blunders. I'll stick to my rule.
Mm-hmm.
The reason, as I said to you, that I know that there's a volatility coming when the gradient change. Exactly, yeah, you're right. And I was ready for it. I was expecting it. But you look at, it didn't did anything. You should look at here. When the market went down, it moved sideways.
Yeah,
which
relative
is
strength.
Which is
Yeah.
strength. So, but yeah, definitely I had to sell here
Mm-hmm.
because this was a big candle and a big volume update.
Gotcha.
I could have, I was very near to sell actually all of it. But if you look at selling here or here was not a big difference.
Mm-hmm.
I mean, theoretically, yes, but really otherwise not. Even if I'd kept it here, it would have broken my 50-day anyway here.
Mm-hmm.
So I would not have been better out. So selling instance is good. It's not bad. I mean, I initially thought, this went up, but I don't care. I don't care anymore. I used to. But if I stayed with my rule, I would have actually lost off here.
Mm-hmm.
The other share was Apple. So what was happened here, we remember, is one of the stock performing very well. And let me show you. It was here on the weekly.
Mm-hmm.
And actually on the weekly, the RS was at an all-time high. This is the Blue Dot, famous Blue Dot from Market Smith.
Mm-hmm.
So that was the important thing for me. So I bought it here coming out. And I sold some here. Again, I had a 50-day rule.
Mm-hmm.
So my early stop loss was somewhere here. So once 50-day went about, so first it was on stop loss,
Mm-hmm.
7%. Once my 50-day crossed my stop loss, then it was on 50-day.
Mm-hmm.
But then, it was going into 100. And I said, I must take some off because this mental resistance. And I was not actually right. It went down and I was very near to sell it here thinking about it. I said, no, I'm not going to break my rule. I said, 50-day, I'll wait for it. And then it went up. And again, you see stocks, big volume here,
Mm-hmm.
big. So I never waited even for the next day. I just sold it here. I don't care. So selling instance is not bad. You could be early, but fine. It's okay. I utilize this money for, for some other stocks.
Right.
So why to play choppy, small and choppy markets? So I'm just going to put a theoretical scenario.
Mm-hmm.
So this is the position sizing 8, 15, 20, 25, and 30. And I'll explain you why I picked 15 also. So I do not like to risk more than 1.25% of my equity at one stock. So it means the risk amount will be 1250. Yeah. And invested amount will be 8,000, say.
Mm-hmm.
And stop loss, 8,000 for this, 15,000 for this. depending upon your position size. But if you look at, you can afford 1.25 loss, and you can go as high as 15.6%.
Mm-hmm.
And that helps a lot. When I reduce my position to 8% or 6%. And that is the reason that my risk of equity is way, way lower in cheaper in sideways market.
Mm-hmm.
So anyway, so this is so it's 8.33 stop loss for this 1.25. My normal stop loss is 6 to 7%. So actually that helped me in that way. And this 15% also allows me that even if it is 8%, I can still go with it because this is within my rules. If I go to 20%, I have to reduce it to 6% or 5%. But my normal stop loss is 6 to 7%.
Mm-hmm.
Now, in choppy market, this is very interesting for people to understand it. So if I reduce my position size to 8%, and if I reduce my stop loss, say, to 5%, what happened? My risk amount is 400. That is what I maximum lose. If I had 100,000, yeah, my investment amount is 8,000.
Mm-hmm.
So if I sell at 5% stop loss, it is a risk of 0.4%. Yeah. So even if I lose a position size of 8% with a stop loss of 5%,
yeah,
I must not lose more than 4%. If somebody is losing, if people are having a bigger drawdown, they must be thinking. They must be doing something very wrong. I mean, how many stocks you want more? So out of those 10, maybe two might give you some money to invest into a few more. So actually, you can very easily do 15 and still lose only 4% of your. And normally I go to even 5 or 6%. So I can even afford maybe 20%, 20 trades just to lose 4%. So now now I hope people are with me that what makes me to reduce my drawdowns. If you had more than 2 stocks, you buy it with everything on your side, and if they're not working, first step, reduce your position size. Chill a little bit. Don't go for the third one straight away. Just look at the market. Put something in your dummy buy list. Then try it. If you're still wrong, then wait. Then 5%. So for me, losing more than 5% is very strange. Yes, initially, yeah, you can lose some, just because the market moved down and you were in gains, and you can give up some gains. So, okay, you lose 4 or 5% there, 4% there. You must not lose more than. So you must not lose more than 7 or 8% in any
correction. Yeah.
Correction, yeah. Even that includes buying and trying and other things. So if somebody can understand this, I hope that they will be able to reduce their drawdowns, and that makes a big difference to your end results. Now I'm going to talk about this buying trend template with Mark had shared so many times, and in his book. People can go through it. I'm not going to go through every single point. Our aim, Richard, yours and mine, is to guide people.
Yeah.
To look in what directions.
Yes.
It's impossible to put everything in such a short time. So the key thing for me is I will like to buy a 50-day, above 50 days. I would like to buy it above 50 days. That 50 days above 200 day and 100 day. The stock had moved about 30%. It had a good relative strength. These are the sort of things. This is very good. And I'll share you another template with IBD. This is far more interesting. But I must say to you that I used to follow it too much, but then you lose a lot of trades. So you must think that you do not have to fulfill every single condition in this.
Right.
So you have to be a little bit flexible. So it's a very nice one. You put in market in uptrend, market under pressure, market in correction. So you can make an Excel sheet based on mark and based on this and your own checklist, and make this for every single trade you make. And what sort of market it was, when you bought it. Put all these things in, if you can, if you had Market Smith. What is relative strength? What is the return in equity? SMR ratings. I mean, these are all very important things. But do put them in. And then, what base was it? What was your buy point? Relative strength line at or near high or not. In the past, I used to put a lot of in the new high, but you don't have to. It had to be 80. I like above 80%. But if it is new high, that is a cream on top of everything.
Right.
So prepare a checklist, buying checklist for your shares and keep it and evaluate it. This is very important, and I will explain some of these things. Have a high probability base, like power play or high tide flag, VCP, a prior uptrend, length of the base, the longer the better. I'm not talking about years, but months, because it gives more time for the stock to rest. So it's like winding up, spring. There's curling, and the more it takes time, the more it can go up. This is the key. I'm sure many people, not which are doing for years and pros, but many newcomers do not know these things. Base contains element of strength. This is key. I learned it from IBD. Daily gaps up on volume. What is that? Look at this nice base. Look at the base formation. I traded it, actually. I'll show you in a minute. One gap up. Yeah. Another strong rally. Another gap. So that is element of strength. So when you're looking at a base, see if on your right side you are seeing these things. They're element of strength.
And there's also this nice tightness. If you could go back to
that. I'm going to come back.
Oh, okay.
Point.
Yeah,
you're right. You look at here. Exactly, yeah. I mean, you're a guru yourself now. I think you've seen so much now and learned so much, and by teaching people, you learn a lot.
Of course, yeah.
So you're very, actually some stuff I am myself missed by putting up the presentation, and you asked me that question, like change of slope. I even forgot about it. Yeah. Nice high. So I'm looking about the smooth, up here, and then gap ups and nice right side, and then you can see a lot of accumulation.
Yeah.
These are all important things. I'll go back. Daily gaps up on volume, relative strength at new high, blue dot or near high. So not every time you will have that. But that is an extra. Tight weeks, I will explain that. More accumulation than distribution, especially on the right side of the base. So these are all elements of strength. Yeah, let's see what can we see. Up here, it's not the RSM non-new high, but it was good. But if we look at the weekly, we had accelerated earnings and accelerated sales. And I'll come back in a minute. You can see these three tight weeklies, closes, This is also element of strength, element of support.
Mm-hmm.
If you go back, does base contains element of support? Sorry, tide weeks is an element of strength and accumulation, as we discussed. So when a newcomer is looking at, it's better for them to look at these things
Mm-hmm.
to dissect a base. Does it contain element of support? Support weeks are that where on a higher volume, the share went down, but ended up in the upper half.
Right.
It is a support week.
Right.
Base on top of base. A lot of time another base form on top of. There's another example I will show you. And what happens that market goes into correction, or for some reason, stock goes up and then take a break, and then goes up and take a break. So that is element of support.
Mm-hmm.
Has there been a shakeout? This is very strong.
Mm-hmm.
So say up here, say if it had gone down here and then came back, and then that is a shake-up.
Mm-hmm.
And that is very strong. So if we look at here, as you pointed out, it's a VCP, or even you can call it a cup with a handle. Sometimes VCP and cup with the handle is very similar.
Mm-hmm.
Smooth pullback, nice right side, accumulation on the weekly. Look at how it calmed down here.
Right.
Tight daily closes, escalated earnings, number of funds increasing. If you look at here, the number of funds keep on increasing.
Mm-hmm.
Up and down volume was high, return on equity was high. So everything is positive. This is a trade which I made in these months when I was not buying. When I say I'm not trading, sometimes it doesn't mean that I don't have a share.
Mm-hmm.
It means I'm not buying a new share. I'm
Gotcha.
holding some shares. So this is something which I bought based on, so always look at weekly. Look at this tight stuff. Look at this. Look at the accumulation here. Look at all these good numbers here.
Mm-hmm.
The only thing which was negative was group RS rating. But there were some very good stocks with high RS. So that compensated for that.
Mm-hmm.
Also on the right, you see, this is very strong in MarketSmith, that they had a criteria,
Mm-hmm.
and it was passing all the criteria, the E+ rating. This is very handy in MarketSmith. So I bought it here, and I just sold it here. About 12.30, about 15% profit, I think. I don't care about anything. That's enough for me. In this choppy market, that was good enough for me. I didn't wait it, to top, I just sold it here. Because up here it was going on higher volume and a bigger candle. I just sold it. MRNA.
Mm-hmm.
A tough book. Base. It became tidy here. And I bought it here. Yeah. And it went up. And again, I said, I'm going to keep it. I'll keep the 20-day rule closing.
Mm-hmm.
It was written. So when I go, I had a written paper of the stock I had bought. Are strong, I'm going to buy, and I stick to it. On that, it was written 20-day is my rule, closing. So closing means when it's very about to, say, half an hour before the close or 15 minutes before the close. If it doesn't go up above 20, I would have sold it. I would have not waited for the next day. Or the other variation could be that you wait for the next day. But in the choppy markets, I don't wait for the next day.
Yeah.
Because they can tank. It went up, it came down, and then look at that. I sold some here. Too early, yeah, but that's the way I am. Then it went up, and actually, early on the stock when it's like calm down.
Mm-hmm.
And then again, two days. And again, big candle here and a higher volume here.
Mm-hmm.
I'm out. This is why I'm making consistent money, that I'm not waiting for them to turn all the way around. I'm just making money. I actually initially thought to even sell here. But then I said, okay, let me keep it down, for the 20-day.
For both this one and the previous one, where is your initial stop loss? Is it the 6-7%, or are you using the low of the previous day or the low of the day you buy it?
It was 6% because this was not that great market.
Yeah,
so I was keeping it to 6%.
Yeah, I remember BNTX and Moderna were like the only growth stocks that looked good right during this time period, right when you were buying this. Yeah.
Yeah. I mean, look at this. Such a nice,
shape. Yeah.
Look at here. Just calmed. Nothing.
Very low volume.
Even here, this day, on high volume, it came back all the way. It was support.
Right.
So these are the sort of things people need to look at, like gap ups and these things, tightening and these sort of things. So I bought it here, let it go down, and I just waited and I sold it here and I sold it here. 50% here, 50% here. If it had come down here, I would have been still happy. I made money. And even here, I would have made reasonable money. But I was lucky. I was not intelligent. I was just lucky. I followed the rules. And it went up and I made money. Because as you said, this was showing very good relatives and this was a good share. This is a classic. I mean, look at this share. How tight is it? I mean, look at here. Base upon base upon base. And how tight it was. And I bought it here. It went up. Again, 20-day was my rule again. Yeah. And it went up. Big volume fell. And then if you look at here, it keep going up, but I was not that convinced, with the volume here, but yeah, I just sold. Was out. That was good enough for me. I actually thought that I must have sold it, all of it. But yeah, I played a little bit with this. This is the sort of thing that, well, if you made a good profit, then you're able to hold these sort of things. That makes you a bit more bold, at least me bold.
Right.
Look at this weekly, on this IT.
Just stair-stepping higher, yeah. Yeah, so tight.
Jumping up and tight weekly closes. Look at the accumulation. Even a blind can, somebody like me, I'm not talking about blind like blind, but like not very intelligent. Somebody not very intelligent like me can pick it up. It's so obvious. So these are the things to watch. And look at the EPS during this time. Going up. Tight weekly closes, accumulation, everything positive. Not going anywhere. Look at tight. Look at the tightness even on the daily. So I bought it here and sold it here. And I actually initially thought I must have sold all here. But I will. Sometimes you have to make some judgment. I let it go down and came back. It was a big day up. So my favorite setups, by any means, power play or high-tech flag is my favorite. Why? This is the most powerful setup. It has the most highest probability. In one of the books, I forgot its name now, they describe these as the best probability trading. Life was a 2019 champion who's, I think, running CTT now. He had mastered himself. And if you follow him on Twitter, he talks quite a bit on it. They are less impacted by the markets. Even if I had to buy a share in choppy markets, this is the one I would like to buy. Consolidations are very powerful, especially in choppy markets. I'm looking for high RS. Actually, even RS and new high. So VCPs and cups with handle, low cheat. These are my top favorites. But sometimes I buy pullback buys and at time buy Ws. I do not use trend lines at all. Any other setup, I don't. I just use 20-day, 50-day, 100-day price and volume action. If a share is going up on low volume, I'm worried. So
Keep it simple. Yeah.
Yeah. These are my favorite setups. And handling the stocks and the markets. Now, this is the key again. What to do when? This is the key. I will go from the bottom. Market in correction. Keep an eye on follow through day. A stock with higher breaking out, etc., etc. Yeah. Follow through day. Put to call ratio. So those are the sort of things. The sentiment they give you when you are about to, bottom. So you can put market correction into two actually: deep correction and a bear market. So say up to 20%. People normally call it 20%, and below that is sort of bear market, whatever we want to call it. Then sideways or choppy sector rotation. So what I'm saying is, I'll come here when market is uptrend, and these will be dealt here in the market in uptrend, not here. So I'm expecting that everybody must be out here. If you're not out, if you're hit by 20% correction, you must be doing something very wrong. Think about it and learn and read. Sideways markets, so type stop loss, small position sizes, progressive exposure, high RS, and sometimes take quick profits. Now, this is the key about handling of stocks. Market and uptrend, as we said, coming from a bear market, we discussed so many examples, and you also said you bought so many times these sort of stocks, high RS stocks, new leaderships. This is the time when you get most of the multi-baggers.
Right, right.
That is why I keep them for a longer period. Yeah. And so from deep corruption also, you can get some multi-baggers, but they are much lesser than. I tend to hold longer, but less than that. From consolidation or choppy market, when we go up, I normally stand into strength. And a lot of time, anywhere between 20 to 30%. So if my stop loss is say 6%, and if I'm making 25%, 1 to 4, 1 to 5, why not? I'm going to sell it. So I start selling it. Not all at once, but stop selling it the way I explained earlier. I'm selling in parts. If it is a powerful rally, then I might not go with 20 to 30%. I might say, okay, I'll use 21 day or 50 day. Or if it is extended. Yeah. If the market is extended and you can see signs, which we discussed earlier, then I'm very careful. Even if the Nasdaq is going up, other things is going up, I'll start reducing the exposure. I will start taking profit, sell into strengths, and even start thinking of buying large cap. And I will show you an example on that. So this is the way. Just like a tennis player, you dock to grass or clay or hard court or left-hander or right-hander or faster or whatever. Not one formula works everywhere. You have to adapt. If you don't adapt, you will get hurt. Before joining Mark with IBD, I was always looking for big winners all the time. But then I realized that the chance of multi-baggers reduces with different markets. So now I play and hold according to different markets.
Makes sense. Yeah, for sure.
Yeah. So I mean, I'm not saying that you won't get multi-baggers here or in choppy markets. You can still have them. But what is the percentage? 1 in 100? 2 in 100? What are the odds that you would have bought it? very low.
Right.
So as I said, I play with odds. So to me, why I'm going to try something which is less probable. We all talk about, oh, I bought this, it went in the choppy market 100 times. I don't care. I don't want to make 100%. Sometime I make. I'll show you. Not 100% but 50%. But if you're lucky, but then you have to be lucky too.
Right.
So the odds of having a multi-bagger is much lesser in other markets than in bear market coming from. So people must play according to the market.
Mm-hmm.
That is what that is the way I do. Again, everybody has their own way to do it. There's no one way. So somebody does it some way. Somebody just wait for multi-bagger and they make a lot of money. They are very good at point picking up. I'm not, maybe.
Mm-hmm.
I'm good at it when the market is there, and I'm good at when the market is correction, and might be much better when the market is in consolidation. Because RS is the easier thing to see.
Yeah.
In industry groups moves, you can see that. So a lot of things are easier in those markets.
Right. Right.
So
they stand out a lot more.
Yeah, my apologies. Don't take me wrong. Everybody had their own way to play.
Yeah.
People can pick up stocks everywhere, beginners everywhere. I can't. But I'm just trying to explain that the odds of having multi-baggers reduces in different markets.
Yeah. Yeah.
Selling and handling stocks. So everybody talk about buying and buying and buying and buying all the time. But these other things are very important. I find buying way easier than selling. Keep losses small. Move stop loss to break even as soon as possible. Do not let good size gain turn into losses. Now people need to understand that selling is of two types. One is defensive selling and one is offensive selling. And defensive selling is that when we are forced to sell a stock.
Mm-hmm.
Offensive selling is when we are taking profits. Yeah. So defensive selling is that you're hit by a stop loss. So in choppy market, you can reduce tighter the stop loss. But as I said to you, that I minimize my drawdowns by selling when the shares had violations or squats. And that made a big difference to my thingies, along with progressive exposures. Offensive selling is take smaller profits in choppy markets, selling some into strength, sell some between 20 to 30% normal market, hold longer, use 21 day or 50 day or 20 day or whatever you want to call it. Sometimes, very rarely I use 9 day too. For a very high octane share which had gone very, very extended.
Like UPST recently, it had that breakout from the earnings gap up and just rode that 10-day until recently it started consolidating and broke it.
Yeah. And then and then if it's very extended, then sometimes you might sell some in strength and keep the other for 9 day or 10 day, whatever you want to call it.
Right.
Some people use 9 days, some people will use 21 days, some people use 50 days. Yeah. So what are the bullish signs? Yeah, you pointed it out earlier. When you buy a stock, follow through price action after a breakout, 2 to 3 follow through days. Quiet price action after the breakout. Let me see. I'll show you that how I moved on to a large cap in this market and how I handled it. Yeah.
Yeah.
So first of all, let me explain you what happened. It was a very good VCP action. And then you can see there are 1, 2, 3 gap ups there. It was a nice thing. And then it became a bit quieter. If you look at here, not very high volume.
Yeah.
So I bought it here. And my stop loss was here. So my stop loss luckily about 4% for this one. Yeah. And you can see about 5 or 6 days, straight up. And then Once it crossed my break even, so I'll not change. So I moved it to 20-day. And then, if you look at here, quite price action after the breakout. After moving up so many days, it was quite.
Mm-hmm.
That is very positive. So once it moved up here, I changed my stop loss to here and then wait for 20-day to catch up. So I switch in between a physical stop loss and 20-day. So I said, once it moved here, and it was a little bit jumpy here. So I said, this is my stop loss. But if you look at here, the 20-day and this was nearly coinciding with each other. So I jumped between these two. Sometimes, sometimes it could be hard 20 days, sometimes I might, because it was a difficult market. So I wanted to be, not lose it. And look at that, I sold some here and some I sold after it broke 20 days, the time it broke 20 days, sold it. Later it went up, I don't care. Yeah? Are we taking too much time?
No, this is fantastic. This is great.
So violations and bearish. So low volume out of the base and high volume back. I don't have examples for everybody, unfortunately. Otherwise, we'll be here all day. So I suggest people to go and read Mark's books.
Yeah.
And he had given so many examples on presentation and others. 3 or 4 lower lows without supporting action. Big down days with heavy volume or more are worrisome. More down days than up days, more bad closes than good closes. Close below 20 days soon after the breakout. Lower odds, below 50-day. Retracement of a good size gain. Wide price action and increased volatility. So it's not that you go and sell on 1 or 2, you just let few of them to pile up and then you sell. I will give you an example here. I actually bought it. Did I talk about squatting here? No, I think I'm not. Anyway, if you look at it, this is a squat. I didn't bought it here though. If this goes up like that and come back all the way, if it is below the middle point, with this sort of, I'll sell some in the middle, at least half. And if it goes below my break even, I will sell all with this sort of thing. This is not good for me. Because it went up, fine, yes, I don't care, but the odds are low.
Right.
There's a small squat here too. Yeah. And what happened was that I bought it and then it came back. Market was tough. Although it was not a big percent, but I sold it half. But then what happened? It started to go up. But I sold it here. The reason is because the volume was not good. And I can see that this could be a resistance, so I just sold it here. So in case if I had not sold it here, look at here. This was not bad, 1, 2, 3, 4 days. But on 5th day, you want it to be supported. Went down. So you must be selling here. So instead of waiting all the 5, 6 or 7%, you can use these violations to sell earlier. Or you can use these squats to sell earlier. So these reduces my 6% stop loss to 3% stop loss or 3.5% stop loss. So these violations have made a big difference to my stop losses. This is a classic. I didn't point. As I said to you, I made another slide, and unfortunately, it didn't got what you call saved for some reason. So anyway, this was GM. Now you look at the market is not very good. Even the best of shares won't work. And how to save yourself? So what happened? A nice U shape, a nice cup, a gap up here and a gap up here. I bought it here because it was not too high. I was there, so I bought it here. Went up, stuck there. Yeah, not a worry yet. Gap up, but then it, squatted a little bit, came down, and I sold.
Mm-hmm.
So I made a little bit of loss, but not big, not something like 6%. So I'm just trying to show you that even best of the stock, if the markets are not good, we all get burned, but how to get out, how to handle it. This is important. Mm-hmm. How to minimize your losses is important. Yeah.
Mm-hmm.
This is on weekly. I mean, look at this. Up here, you can see all accumulation. Even then, it didn't work. This is from Mark book again. People must read it. This is when the shares become extended. Look for the largest up day since the beginning of the long move. Look for wide daily spread. Look for recent absorption gaps. High volume reversals, churning. Extended stock 70% or more up days versus over 7 days, 7 to 15 days period. So if too many are positive, be careful. One stock is extended 6 to 10 days and it's accelerated, then you have to be careful. So these are some of the things, which I keep in mind while I'm handling these stocks. Because when these stocks become overrated, you need to come out. So what is my weekly routine? Not all, but my major one. Every week, I will review the health of the market, without a doubt. My top, if you look at it, it's my top one, no doubt about it. I made some notes from Mark books and lectures and IBD, and some short notes about VCP, about just try to revise, I spent about 1 hour going through, refreshing my knowledge. Then Mark, every Sunday, he sent a he actually had 2 presentations. One is on market and one is on stocks as watch list. Remember, if you look at Mark, 80% of the time, he's not talking about stocks. He's talking about psychology. He's talking about market direction. He's talking about sentiments. He's talking about seasonability. And just, he's a smart man. So if you look at Ray, Trader Loin, they all are talking quite a bit about markets also. So markets are key. Yeah, by the way, I forgot to mention a name just before I forget.
Sure.
Julian Kumar. I strongly recommend people to follow him. He had a very good ebook. A lot of people ask me questions about how to handle stocks and how to sell. And he had a very good ebook, very similar to Mark and IBD. And he had explained it very well, actually. So I look at the market split industry group. That is very key for me because you can pick up good shares from there. I review IBD. Most of the time I review 252. I look at sector leaders of IBD. These are the leading stocks of every sector or whatever sectors are leading and the leaders in that. IBD industry themes, and I read an industry snapshot. So a lot of good ideas you get. New America and those sort of stuff. RS scans, Blue Dot, especially in sideways market or bad markets in correction, these are very powerful. There's another one, breakaway gaps. So sometimes these shares gap up. So they're out of my reach. I don't trade gaps. But I put them in my watch list that if they form a base or a high tide flag or a power play, then I'll keep them. So I go through those things. Yeah, this New America is very good. in the new companies or new ideas. This is very useful. So what I do is I narrow down to 20 to 30 stocks, not more than that. And I will show you, actually, I do not even use 20 to 30 stocks on a day. It's difficult. Most importantly, I do post-analysis.
Mm-hmm.
So let me show you the market industry groups. So this is the rank now. This is the rank a week ago. This is the rank 3 months ago, and this is the rank 6 months ago. I'm not much worried about 6 months, but for me, these three are very important.
Mm-hmm.
I look at what are the first 40 leading groups, and I'll show you what I try to do also. This next one is very important. I take all these things to my Excel,
Mm-hmm.
and I start subtracting. What I'm subtracting, I'm trying to see the move between a week, between 3 weeks, 3 months. If you go back here, 3 months, and this year, and even 6 months, I do. But for me, these two are more important. And how stocks have moved. So look at this one here. Computer security. Within 3 months, it moved from 134, steps, went from 140 to 6,
Mm-hmm.
and it's still going up. Yeah, look at this one. It had moved 89, went from 102 to 13. Yeah, look at here, 87, 2, still going up, 128. So what I do, I go on these. So I look at them and see what is happening in different industry groups, and then click them up, and it shows me the best shares and other shares. I'll show you an example that how I picked up a cold share. It was not here at that time. It was way on this down, but I was able to find a share, a very good share actually. Of coal. And I looked at over there. So if you look at here, and it was making a base upon sort of base.
Mm-hmm.
And if you look at here, the resistance was all-time high. And up here, it was okay. Let me show you actually what was happening on the week, because it was the week on which I bought. I mean, look at this accumulation. And then when it pulled back, look at this. And then look at this. Yeah?
Mm-hmm.
So tight close weeks, accumulation. And I bought it. And what happened? I sold everything, actually, not here, actually a day here. I just sold it. And actually, it was not a bad sell. It came down because the market was too difficult. This was like a more than 50% move. I'm not going to give it back. Yeah, on the hindsight, you can say, oh, it went down, but look at that. How can I know it won't come here?
Right.
I'm not going to keep it. I just sold it. All here, up here. It went up. You had any regret? No, I don't have any regret. I was making 50% in no time. But as I was saying to you, that sometimes you're lucky. But again, look at this tightness here. Yeah. So I always had a trading plan. I always write down an entry mechanism, where I'm going to buy, why I bought it, why. But this is very important to write it down.
And you do this all beforehand, before you buy anything. Yeah.
Yeah, it's a plan. It's a weekly plan, and updated every day. How will I position size? And that is all dependent on the market. Selling. You need to know where you're getting out. What sort of market is this? What will you do if trade goes against you? Defensive selling, 6 or 7% or whatever, multiple violations caught. I mean, I always keep that in front, that other than 6%, my other sell will be multiple violations of Scots. Offensive sell. Where are we going to take profit? So if we are under fire, tomorrow market goes down 3%. If we had that written, we won't make bad decisions. By the way, I want to extend one other thing is that a lot of people, they had stop losses. If the market is tanking down, say 3%, a lot of people put their stop loss and keep them there. I don't, I take them off for a minute because you will be watched away. And then you will find that because anyway, you're not going to get a good price.
Yeah.
So I hold it for a little bit and see what happens. And then try to sell it on because in early on, I used to lose a lot. And I learned that not to do that. What is my daily routine? So if Mark had additions on his list, so I add that. Daily percentage in the industry groups, I will explain that in a minute. Stocks on the IBD, move on the IBD. This is a very strong thing. And IBD shows stocks which are going on high volumes, the leaders. Very important. I read their big picture every day. I look at their psychological market indicators, whatever is updated. RS line, Blue Dot, new highs, breaking out today. So I also update my pre-trend buys, as I discussed earlier. They're very useful in things. I don't have to buy things in post-analysis. So I'll show you this one thing only, industry groups. Okay, this is very important. It's not just for me, but I can show you that this is a very old slide actually. This was like 1.5 years ago. I used to think that I'm Mark. I'm Mark, I'm Megan, and I'm going to trade as Mark. So for me, it was not important that I'm going to make profit or not. My aim is to do the right trade. Money will follow.
Right.
But then later on, Mark said somebody about Mark Ritchie, a very good, very high quality trader. He worked with Mark. I think he was also 300% last year. And he said, oh, if there's one person I can trust, it will be Mark Ritchie. So I said, why not me? So I assumed that it is not my account. But every day, every week, every month, I will be praised what I did. This is basically post-analysis. Yeah. So whether I stuck to the discipline or not, as I said, profit is not the goal. I'll be judged on discipline, how I did the trade. As I showed you, I did General Motors and some others, and they were lost. But they were the best trades.
Right.
Yeah, but sometimes you lose, sometimes you win. We cannot win all the time. Main thing, this is my daily routine actually. This is my daily routine actually. What I'm trying to say is that review my daily reminder list. So this is my daily reminder list. Before the market open, 15 minutes earlier than market open, I go through this list. Now it is updated. This is an old one, but this is what it is. So I'm my own biggest enemy. Calm down, no rush, no panic. So I put whatever my weaknesses are here. So just before market open, I remind myself, and I had this in front of me as a hard copy. My wall is on my back, unfortunately, so I couldn't put it. So it's in front of me on my table. The other thing which I had is, okay, so that was my reminder list. Then I had a focus list. Out of that 20 or 30 stocks, I do not have more than 6 or 9, maximum 9 for the day trading. I had 20 or 30 stocks on the list, on the side, just to see the market health. But I'm only focused on 6 or 9 stocks. So I use 2 screens. On one, unfortunately, I'm not at home. So on one screen, I have all those 6 or 9 stocks displayed. And also, I had marked buy points on there where I'm going to buy. They're marked as a line.
I like
I
that
don't
a lot.
have to.
Yeah.
That is in front of me. I can see how far I am from the one. Then I had a hard summary, hard copy that, like, what are those 6 shares or 9 shares? And because these are minute charts.
Mm-hmm.
I had another chart where I can flick to yearly, daily, but sometimes it takes time. So, but on my list, I had that it is a power play or what? What sort of is it? Yeah. What industry group is it? What is its ranking? So I put a lot of things up there. What is RS? So those 6 or 9 stocks, I had a summary list, which tells me what are they, so that I don't forget. And then also what I do, I rank them. Preference on power play, preference on industry group, preference on Blue Dot, preference on base structure, So I had a rank list. So if nearly all of them are about to break, I had a rank list. So I don't make a last minute decision. So if one break out earlier than the other, so I might hold both, and then later on I might sell one of them. Or sell something else if both are working well. Yeah. Prefer a stock if industry group performance is excellent. So if everything are similar, I'll prefer even with the high industry, better industry performance. Even you have seen the rankings in industry groups, that is what I'm talking about. Have the main list on my screen to see the overall health of the market. If I had only money for one stock in good market, but like to buy stocks, I use margin for the day, as I said earlier. Later on, I think what to do, what to sell. Sell something by the end of the day. So just I concentrate on 6 stocks mostly, because it's nightmare to keep track on. If those 6 stocks which are near, because other stocks are not near the buy point.
Right.
So I'm not going to buy a stock which had to go 3% up and then break. I don't buy that.
Right.
I don't buy a stock which had to go up 3% to buy. I will like it to go up and then stay there for a few days and then break out. The other thing I would like to mention that, especially in the choppy markets or difficult markets, I do not tend to buy in the first 5 minutes or 10 minutes, because a lot of times the share break out, and just like today, they just turn back.
Right.
So I let the market settle a little bit. It's better to settle rather than trying to jump in the early times, especially in the difficult markets. Be very careful. I mean, that is the way I do. Now, I think we have left a couple of slides more now. So this is the daily percentage change. So if you look at the price change, I filter it on the highest price, what had done good on that day. This is from 17th of 9th. So like this is done 4.2%, this is 3.9. Food and dairy is our defensive stocks. Yeah. Many of these are also defensive, so you have to be careful though. So if you look at here industry groups, they are all D's and D's.
Yeah.
Now, if the market is up, say 2%, am I impressed? No, I'm not impressed. Now look at another day. Yeah, this is 1st of October. Now we're at few A's now. This is a little bit positive for me. Just comparing. I'm not going to buy just based on that because the market was bad. I'm just telling that how I look at daily industry groups. And I mean, this is on my a small computer. Market Smith is opened, and I like to see right in the middle just what is happening, what industry groups are performing.
Right.
But I'm not going to buy anything which is not on my list. It had to be on my list to buy. The only exception is if Mark adds a share, and I look at Market Smith, I had enough time, 1 hour, 2 hours, to think about it, then I might put it in that watch list, but then something else had to drop out. But that is not, I buy from my focus list. I'm not all over the place. I found out it's impossible. you can buy something which you, and if you had waited, you could have bought a better share.
Right.
So just for the example of Blue Dot here, if you look at here, the stock is not making a new high yet, but the relative strength is new high. This is excellent. This is from September, whatever. Another one, AXP. Here, it had a blue dot. It had a blue dot. And I think AXP is doing very well. I didn't bought it, but I think AXP went up. So this is the power of blue dot. It was a blue dot here. So these are my final one. How I trade. Trade the probability in favor, market at uptrend, or long-term, medium-term, buy from tight areas, high probability setups. In strong market, I start with 15% position per trade. I'm not good at sliding in. I'm very bad at it. So what I do is in a strong market or good market, I will go with 15. And if needed, I might cut it down. Cutting it down is easy. But stocks which are strong, they don't let you another chance to buy for another 30%.
Right.
So I used to, And also, as I said to you, I started buying 15% because I can buy 7 shares. It's not strictly 15. Instead of 205 shares, say, I might buy 200. Instead of 197, I might buy 200. So it's roughly 7 shares. So I used to buy 25% share, but what will happen? The share I will leave will go up. So doing 15% give me 2 benefits. One is I can have a wider stop loss for my risk, per trade. And second is that I had more shares. But going below 15%, I believe you're diluting. Yeah, just the 1.24 I just discussed.
Yeah.
Go slowly, discussed earlier. Position size, continue to work 10% and then 15. So if the stocks keep on working, then I might go to 10%, then 15%. And my investment started going up. If not working, I'll stop, pull back. This was the key. Bend with the market. Trade the largest when market is good. Smallest when this is choppy. If last 2 trades show losses, reduce position size to 8% and then to 5%. Do not trade when probability is low. That's my key thing. And best of luck for everyone. I hope some people might have learned something. But again, these are my view. If you look at Oliver Cal and Thomas Carlo, Ryan or Matt, Manish, we are all different traders. Everybody had their own ways. I'm not saying my trade is the right way or somebody else's trade is the right way. It's suited according to your personality.
Absolutely.
Oliver, I see, do a lot of high octane trading. If you look at his USI, I see he was up and down quite a bit, throughout the year. But he had the guts to do that. I can't. I would have lost my confidence if I lost that many percentages. A lot of people lost a lot. Even this year, you can see people were 400 and then you can see 150% or even vanished. I'm not like that.
Right.
I compound. I do not let things. But again, everybody had their own way to trade. And these are all great traders. And once I even thought, I mean, these are very nice guys. We talked with each other. Anish actually had put a meeting together and we all used to, first time we used to talk together, not anymore, because our trading styles are so different. Yeah. So one time I was very near to say, why not I trade like Oliver Cal? Then I chickened out. I said, no, my things are working for me. I'm a consistent trader. His personality is different than me. He made like 940%. I can't do that. I mean, I can't do that. So I had a different style. So I might lose my edge too. Right. So I didn't did that. So all of us have different trading styles. So people need to find their trading style. Any question, Richards?
I think First of all, thank you so much for going through your entire process. This was really awesome. And could you go back one slide just to stay on the key points while we're talking the last bit? Yeah, I think this was really great, especially going through how to trade in different market environments. I think that's what really stood out to me. Using progressive exposure to scale back when things aren't working. Like you said, that's, as Mark loves to say, that's going to keep you out of the bad, choppy environments and make sure you're trading your largest when the market is good and your smallest in a choppy or difficult market. So no, this was fantastic. There's so many key points to go through. But yeah, I just want to thank you for putting this all together, and I hope everybody watching appreciate it as well.
Yeah.
But yeah, I always like, yeah, anything else?
And I say to people that do, please listen to market, understand the market.
Yeah.
That is the key. And Richard, thank you very much for your help and for your patience. It took me a long time, but you were patient.
Well, it was worth it. So no, I'm happy. And you were putting in a lot of work. So I really appreciate that.
Thank you very much, Richard. And you're doing a great service to the people, and people are learning a lot from you. Wish you best of luck. And at your age, I'm sure that one day you will be a very successful trader.
Thank you. Is there anywhere people can reach out to you if they have questions? Is Twitter the best way, or?
Yeah, Twitter is the best way.
Okay.
Or you can give my email to them if somebody wants to. But Twitter is the best way, and then I can communicate. But the trouble with Twitter is a lot of people try to get help.
Yeah.
And the unfortunate thing is, you cannot explain them, on Twitter, whatever you do.
Yeah.
Hard to explain. You can tell a point here or two.
Yeah.
But it's much easier when you're explaining them.
Yeah.
But definitely I will try my best. A lot of people ask me questions. And one thing is that just working hard is not enough. Working in the right direction is very important.
Mm-hmm. Mm-hmm.
Having a good trading strategy is the right thing to do. If you don't have that, things will not work for you. Yeah. Thank you very much, Richard.
Yeah, thank you. To everybody watching, I hope you enjoyed it. If you did, go ahead and leave a like down below and subscribe if you want to see more great interviews just like this one. And we'll see you guys in future videos. Thanks.
Thank you.